Hi, my name is Aziz, a fellow of the Association of Chartered Certified Accountants. Welcome to part 2A of the course Bookkeeping Up to Final Accounts. Today, I'm going to talk about account codes, chart of accounts, general ledger, and journal. Now, what are account codes? Before recording transactions, those transactions need to be described. First of all, if they are to make any sense, you need to describe them so that they can be organized after being recorded. Bookkeepers and accountants use account codes to describe transactions so that the details of those transactions can be correctly recorded, classified, and retrieved for reporting purposes. Now, for example, if you buy office stationery for use in your business, that will be your business expense, which you may want to record under printing, postage, and stationery. Now, that's a category. So, for ease of identification and reporting, you have to assign a unique code to that transaction and other transactions in the same category. Another example is an invoice that you have issued to your customer for a service that your business has provided. That will be your business income. But it must be given a description. In other words, you have to give it a code, which will describe it as, say, sale of clothes, and so on. Another example is a computer that you may have bought for use in your business, which will be one of the fixed assets of your business. You could classify it as plant and machinery by giving it and other related items a unique code. When I say other related items, I mean items that fall within the same category. An example is a server. So they have to be given the same unique code. So very briefly, account codes indicate the type of revenue, expenditure, or assets that are being recorded. The number of digits in each account code depends on your preference and the resources at your disposal. But if your accounting system has been computerized and your business has invested in an ERP, say enterprise resource planning software, such as SAP, each of your account code can be up to 10 digits. But ideally, you should keep the number of digits in your code. Keep the length of each account code within a reasonable limit. Chart of account. What is a chart of account? A chart of account is a directory of nominal ledger codes, which arranges codes under 5 categories, also known as account types. The main categories are assets, liabilities, equity, income, and expenses. So, having a properly organized chart of accounts will make it easy for you to track specific business information. To have a well-organized chart of accounts, you have to specify the number range for creation of account codes within each account type or category. Now look at this table. The 5 categories in which account types are broken down are shown on the left side of the table. Assets, liability, equity, income, and expenses. In that order, ideally. Now, under the fixed assets, account code can be created from code 1000 to 1005. Say, okay, your code could be longer than that, but you must keep them within the appropriate range. Say, for instance, if you buy a computer for using your business and you want to give it a code, that code can be anything from 1,000 to 1,500. If you buy an item of stock which will fall under your current assets, that code, the code for that transaction can be anything between from 1,501 to 1,999 to 1,999. 1,999. Now, on the income side, if you provide a service and you want to describe the service and you want to record the service in your nominal ledger, the code you are giving it could be anything between 4,000 to 4,999. In order for this to happen correctly in real life and work in your favor, you cannot afford to give everything Tom, Dick, and Harry a right to create account codes. Creation of account code must be treated, controlled, and monitored. So ideally, this responsibility can be given to somebody senior in your accounts team, ideally the accounts manager. So that if anybody needs to create an account code, they will approach that manager or finance, head of finance. We will then create the code for them in the appropriate category. If you don't do it this way, and you allow every Tom, Dick, and Harry to create account codes, your nominal ledger will be a mess because codes will be created in wrong categories. Your trial balance will look very untidy. It will be very difficult to trace our transactions. Some transactions may even be recorded in wrong places, and it will create a reconciliation nightmare. Accounts in the expenses and income categories are known as revenue items. Because look at them, income and expenses. The 3 items, asset, liabilities, and equity, they are in the balance sheet category. The last 2 items, income and expenses, are in the income statement or profit and loss account category. That is why they are called revenue items. Because the transactions they relate that fall under those 2 categories they have a lifespan that is not more than 1 year. So that at the end of the year, when you close the book, we'll talk about closing the book later, all the balances on those accounts will be cleared off to the retained profit account. So that each of those accounts will start on a clean slate in the new year. We'll discuss this more. We'll talk more about this later on when we get to final account preparation stage. General ledger. What is a general ledger? A general ledger is a database where all your coded transactions are stored after being recorded, and from which data is extracted for preparation of your financial accounts, management accounts, financial analysis, tax, and other returns. Those accounts and returns can only be accurate if the contents of your nominal ledger are accurate. So at a very basic level, a nominal ledger will look something like this. The account code under which transactions have been recorded in each nominal ledger account will be distinctly displayed as shown. It could be 4-digit length or 6-digit length. It depends on your choice. On the far left of the column, you have of the ledger, you have the date column, where the date for each item recorded in that account is stated. Each item must also be correctly described. For instance, if you buy a piece of equipment for use in your business, the date on which the equipment is bought will be stated there in the date column. And that piece of equipment will be correctly described. Say, this account, for instance, is for plant and machinery. And you bought a piece of a computer. You record the date. In the details column, you can then say computer, and then say the gigabyte, etc., the memories, etc., etc. And if there's enough room, you can name the supplier, whatever, the invoice number. But that is for another time. Now, on the debit side, because it's a piece, it's an asset, it's an item of, it's a fixed asset that you bought, you debit it. If later on you change your mind and you want to move it from this account to another account, you credit it, which means the balance on that account will go down. You credit it. Now, the column on the extreme right is what they call the year-to-date column. That shows the balance on each account every time a transaction takes place. It may be up and it may be down, depending on the activities that have taken place on each account. Now, to record transactions in the nominal ledger, bookkeepers and accountants use journals. So, a journal provides a means of recording business transactions in the nominal ledger. It has two sides, debit side and credit side. For economy of time and space, debit is shortened to DR, while credit is shortened to CR. Again, a typical journal will look something like this. On the extreme left, you have a column for account codes. This journal example shows that we have a motor vehicle has been bought and paid for in cash. You debit the motor vehicle account using that nominal ledger, using its code, because your asset has gone up, and then another asset has gone down. That is your cash. So you credit the cash book with the same amount so that both sides will agree. However, it's very common, in many computerized environments, for debit and credit items to just be recorded in one column instead of two columns. The one I've just shown you is the traditional method, but most computerized systems these days use only one column for debit and credit. Debit items will be recorded as positive, while credit items are recorded as negative. But if you add all the negatives and positives together, you must have a zero answer. The answer must be zero. That is when your journal is said to have balanced. An unbalanced journal cannot be posted into the nominal ledger. The system will not allow you, if your system is computerized, the system will not allow you to do it until you have actually balanced the account. And I can mention a few off-the-shelf software which will not allow you. Sage is an example. Sage will not let you balance it. Even if you're out of balance by 1 penny, it will not allow you to balance. Sage will not allow you to post the ledger at the journal. Even if you are out of balance by 1 penny. Sage will not allow you. TAS, Financial Controller, will not allow you to post. Oracle will not allow you to upload. And even a SAP, which is an ERP software, will not allow you to post the journal. The idea is to make sure that your transaction is balanced when you retrieve it from the nominal ledger. It's a form of control. Now, this is when in other words, regardless of how your journal is presented, the debit and credit side must agree before you can upload your nominal ledger. Your journal into the nominal ledger. So I will see you in the next part of the course. Until then, take care and thank you very much for watching. Bye-bye.